Hello, Oracles. Today I wanted to go over my Tesla stock retirement plan. So you guys have seen the retirement videos, all of my price targets, but it's all about what do we do when we reach those price targets? What do we do in 10 years, 5 years, 15 years, whenever we are ready to retire and we're looking to utilize Tesla stock for that retirement? What can we do? There's a few different options, and I'm going to share with you guys what I currently have for my options. It actually does utilize companies outside of Tesla as well, and I'll share a little bit more about that when we get into it. I'll also share a little bit of the news that we got over the weekend, a little bit about another legacy automotive maker coming on for the NACS. So we'll get into all of that in just a minute. All right, so as we saw on Friday, we closed down 1.7% at 215.49. Yes, that gap at 221 has been filled. We are still following this downward channel. And right here on that day, we were looking close to potentially breaking below this channel and dropping even faster. Now, the strong level of support that we have is 200. Do not know what's going to happen this week. We are oversold at 27.4, but again, we have seen times where we've had this oversold dip down even further. Volume coming in a little bit heavier than we had been seeing at about 136 million shares trading hands. So the question is, do we continue to dip down or are we going to bounce off of this at this 215 level? We did see after hours, we jumped up about 1.5% to 218.80. So we'll see how we open tomorrow morning. All right, so before we get into my retirement plan, just a couple of things in the Tesla news. Honda and Acura EVs will adopt Tesla's NACS charging port. So these are the next two big ones. The decision has been made that they will be adopting this in 2025 or 2026. Now, next up, for anyone who did not see it, there was an accident in San Francisco involving a cruise vehicle, and the vehicle went out. There was another car that ran the red light. The cruise vehicle stopped right in the middle of the intersection and got hit hard. So that now is raising some concerns, and now regulators are telling Cruise to immediately reduce the robotaxi fleet by 50% after that crash. Now, as I posted out here, I thought perhaps Cruise might actually provide a little sense of comfortability for the public when it comes to autonomous driving. This will not help that. So, my thoughts, of course, have always been, even though it's geo-fenced in certain areas between Cruise and Waymo, at least people, consumers, people who are going to be ride hailing are going to go out there and be like, hey, this is cool. You get that word of mouth that goes out there. This is okay. People get more comfortable with it. The people who are uncertain about it now get into those vehicles. They become more comfortable. That was good. So this here with this accident, reducing the fleet by 50%, it's a lot of pressure that's now on Cruise and Waymo to make sure that they are doing this right, because we want to make sure that autonomy does come out. As Ross Gerber had posted out himself, the amount of bad drivers that are out there, it's literally saving lives to have FSD out on the roads. And we want to make sure that anybody else who is doing autonomous driving also has that kind of capability and mentality behind it, that it's actually a good place that people want to go to and not a dangerous one. And now lastly, before we get into the retirement plan, Brad Ferguson put out a video over on X discussing how the next 2 quarters for Tesla stock could be a bit questionable. We could potentially see production quarter over quarter actually come down. Elon had already alluded to this at the Q2 earnings call. So going into Q3, we might actually see production down. Going into Q4, we might see that again. Now, again, we've got Cybertruck, which is just starting to come out. The ramp is going to be very slow. The Model 3 is getting this revamp of the Highland, or whatever we want to call it, which has not been confirmed, but we know that's most likely coming. That could take it down. This is just near-term issues. It's not like it's going to be any long-term problems, but when Wall Street's looking at quarter over quarter production drops in a growth company, it's just not a good look, as Brad put it. And he's absolutely right. It's not a good look. We're already seeing the stock starting to tank a bit right now. Again, we had anticipated this. However, it could get us to that $200 level. But then we're asking, what are we going to do at 200? Are we going to bounce off of that? Or are we going to break down below it and fall further? So macro could play a big role in that as well. But if we're also looking at some Tesla specific information and we're seeing these numbers and production down, and we're not seeing any major growth, and we're not having any sort of, big catalysts, yes, the Cybertruck release is going to be good. But as we've seen, as we've talked about in August, Anything exciting that comes out is a very short lived pop, and then it sells off immediately afterwards. We could get the very same reaction with the Cybertruck is an immediate pop and excitement, and then a sell off afterwards. Again, when you get into the actual production numbers for the Cybertruck immediately, that could be very dampening of the stock price. So, just a little bit of warning coming from Brad Ferguson, and I fully agree with him on this that just be cautious when you're looking at the stock over the next 2 to 5 months because it might be pulling down further. Me personally, I think that's going to be a great buying opportunity. And you'll see with the rest of this video why I think that's awesome for retirement in the future. But just remember that could be happening in the near term volatility. So just be prepared for it if we do see production numbers coming in down quarter over quarter. All right, so now getting into my Tesla retirement plan. So looking down the road, we all have different ideas and visions as to what we want retirement to be. We all have different time frames as to when we're going to get there. We all have different reasons as to why we want to retire. So, of course, none of this is financial advice. This is just me for my own personal situation of realizing what I want to do in life. I finally came to that conclusion of I want to be an investor. I love this. This is what I was born to do. When I was younger, young kid, early teens, I used to test it with my buddies and I would put a handful of change in my pocket. I would wake up in the morning and my pocket literally would make money. This is literally what I was born to do. Even when I was as young as 7, 8 years old, I realized, hey, interest coming into my bank account is just free money. I want to be able to do that. I wish I went back then and I told that little kid, hey, continue doing this. You can really be wealthy with this. I can't. I'm now 43. I have to take that knowledge and wisdom and go forward with it from here. That's what I'm going to do. Now, looking at Tesla stock itself, my whole plan for this is I do think Tesla is going to eventually pay out dividends. Most likely not till at the very earliest end of this decade, they will end up paying them out. It's going to be some time. In the meantime, it's accumulating as many shares as you possibly can to be able to benefit from those dividends. Now, for me, I want to do it from the dividend route. There's other ways you can play this as well. Some people are looking to just have that stock to be able to sell it and just kind of sell a few shares based upon growth and just live off of selling that. Other people want to play some options with it. There's a lot of different things you can do when it comes to Tesla stock in the future. And of course, in 10 years down the road, nobody knows exactly where we're going to be at anyway. So a lot of this is speculation. With that speculation on top of it, I ask myself, well, how can I get as many shares as possible now with cash flow coming in that I have? As many of you know, I'm not very happy with my job. There's some things that are going on. And quite honestly, I don't like trading my time for money. That's what work is. That's typically what it is you trade your time and your wisdom and experience for money. But having someone else dictate what that value is not what I'm all about anymore. When I was younger, I was hungry. I wanted to go out there and work, and I still want to work. I do. I'm a hard worker, but I don't want somebody else dictating what I'm worth. So now what it comes down to is how do I generate as much cash flow as I can outside of this passively? Dividends are the way I'm starting to do this. I've already mentioned it before. I have my dividend portfolio built up. Again, still working on that. Members and patrons get full access to all of that on a weekly basis. At the end of the month, I will share it with you guys. I'll share a little bit of the spreadsheet right now as well. But what I'm looking at doing is getting a snowball effect of cash flow coming in from all of these dividends. So it's not a matter of me putting all of my money just directly into Tesla stock, just because of the fact that I'm not happy with my current situation and I want to be able to bring in money passively. This is my plan, is to get as much passive income coming in from these dividends to be able to live off of that, then snowball all of that into more Tesla stock. That is my ultimate plan. That is the reason why I don't go all in on Tesla stock now. I also like to be diversified because God forbid something does catastrophically happen to Tesla stock. I have all of these other things as backup plays as well. Now, of course, I do still think that Tesla is going to be dominating the world in the next 10 years, but I always like to have that safety net. So this now is going to be twofold. It's going to be the cash flow driver to be able to get as many shares as I can of Tesla stock, as well as being that safety net on the back end, just in case that does not pan out. Kind of a win-win in my eyes. This is how I like to set up my strategy. And so looking at my spreadsheet here, and again, I'm going to go into it in more detail. I have listed the top 32 stocks and ETFs that I'm going to be snowballing, and it's in order of the snowball. So TSLY is number 1. So that is generating the most, very volatile. Again, Be cautious with it if you are going to get into it because it paid out 83 cents last month. It could very easily pay out half of that next month. No one knows for sure. You can buy in the T plus 1 day where you typically get what the payout is going to be and decide how much you want to get. But for me, I'm snowballing it this way. The ones I have highlighted here are the ones that I'm going to be keeping long term. So I will end up building those up. I have different goals to hit. I have a $250 per month, 500 per month, and 1,000 per month. And I factor all these in. So currently, right now, based upon what I have invested in all of these stocks and ETFs, I am pulling in $250 every single month. Now, I also have CDs that is pulling in another $100. Now, at the end of this month, I have two CDs that are going to be maturing, both for $5,000 each. One, I'm going to be rolling into a treasury. So, treasuries are going to be basically the same as CDs, except you do not have to pay state tax on them. So, I am still learning these things as well. That's what I'm going to be doing. So, 5,000 goes into a treasury, and another 5,000 I'm going to be rolling into a smattering of all of these different stocks and ETFs. So I was going to just dump it all into TSLY, but again, the volatility and uncertainty of this makes me want to separate things out. And so what's going to happen over time is those are going to snowball. They're going to continue getting more and more money in them every single month or quarter as these dividends pay out. I have drip on. Drip is where all of that money, that payout that we get for the dividend goes right back into that stock or the ETF as well, thereby building up even more shares and then giving a bigger payout the next time around. Again, that dividend strategy is a whole different video I'm going to make in the future. But by building up all of that cash flow generation, I will end up having larger sums of money to be able to invest in Tesla stock. Again, I do think that we have some time before we really take off 2025 or 2026 when the stock is really going to take off again. In that meantime, if I can build up all of this cash flow generation to be able to step away from my job and have extra money coming in from other sources as well between the YouTube channel, Patreon, if I can get monetized over on X, these dividends, CDs, any other freebie money that I have coming in, or any other areas that I want to work. Maybe I do find a part-time job or whatever, or maybe I can do more videos for you guys on here. Whatever it is, I will have options because I have that passive income coming in. Then I can really start focusing all of that money that I have coming in into Tesla stock and building that up. Because again, if Tesla is going to pay out dividends by the end of this decade, I want to accumulate as many shares as possible. So that there is my whole strategy for this. I also started investing more money on a weekly basis into different ones of these ETFs and stocks for all the dividends. So every single day I'll have this updated. So again, those of you who are members and patrons, if I can, I'll update the spreadsheet on a daily basis. I truly don't think I'll be able to with the time I don't have right now. So I will be updating it on a weekly basis, but I am adding significantly more every single week to all of these stocks and plays. Now, when it comes to Tesla stock itself, I'm still at $15 a day. And if we dip under $200, I will be increasing that to $20. I have not changed that strategy at all. I am sticking with that. I'm just adding more on top of it in another area to generate more cash flow to be able to buy even more Tesla stock. And again, when we look back at this 10 years from now, I will have my giant dividend portfolio all built up. I will have Tesla stock as one of them, hopefully. And I do have some other plays as well. I think there's going to be a bunch of other companies out there: Palantir, SoFi, Block, PayPal. Many of these may end up paying out dividends in the future also. So it may be worthwhile to be investing in those. Not financial advice again, but I'm also putting in $1 a day into SoFi, $1 a day into Palantir, and Block I'm adding to every once in a while when I see it dipping, and it's dipping pretty hard right now. So I may add a little bit more to that as well. So looking at the fact that some of these dividend plays that we have out there aren't dividend plays yet. When you look back at Apple stock, they didn't always pay dividends. They did, and then they stopped for a while, and then they didn't start paying dividends again until 2012. So if you were investing in Apple stock between 2008, when everything crashed from the housing market, through 2012, you could have accumulated quite a few shares, and then it really started to take off from there with the dividends. This very well could happen with Tesla, Palantir, SoFi, Block, PayPal, a lot of other companies out there. So not to say it can happen, but there's potential for them. So just pay attention to what's going on out there for some different options for yourselves. So that's all I've got for you guys. Let me know what your retirement strategy is for Tesla stock in the future. I would love to hear it because I know that there are many different plays out there for it. So let me know your thoughts on that. Thank you so much for watching. I appreciate all of your support. Have a great one.